There's no question that the ambition and the acquisitions of PillPack and um, Whole Foods by Amazon has caused lots of problems for the likes of Kroger and Walgreens. One can look at their stock performance in this year alone, down respectively 20% each. And even over the past 5 years, both stocks have significantly underperformed the S&P 500 as losers in a 5 year trend that has a 5 year period that has been great for stocks. Um, One thing I really like about these giants is that both are being very proactive in fighting against Amazon. As someone who lives in the Cincinnati market, I have watched and seen firsthand the effects of this Walgreens Kroger partnership, where Walgreens essentially transforms its locations into a Kroger pickup and stocks some of its aisles with Kroger merchandise to cut down on cost, and really emphasizes what it does best. Um, the stores are really good. They're clean. They really put both companies' best foot forward. And it's part of a bigger movement, especially for Walgreens, to fight the innovation of Amazon. And for Walgreens, it involves partnerships with Microsoft and Google, and other moves along the way to try and battle what Amazon might be up to. That no one really knows, but what Amazon might plan in the grocery space, the pharmacy space. So I really like that. And with that, given the losses of both stocks, coupled with the proactive moves that both companies are making to fight against this giant, you have to wonder, is the loss overdone? Is Kroger and Walgreens now a good investment opportunity? When you look at them, you've got Kroger here trading at 9 times future earnings. Likewise, we have Walgreens at 9 times future earnings. And you look at their forward-looking growth, you've got Walgreens growing 4% and 2% this year, respectively. And you've got same thing for Kroger, about the same in terms of growth. When you Given those factors, you might think that one is a good investment. One, even both. I could make a strong argument that either stock is a really good investment right now. When you look when you look at the stocks as far as the trends, there's not a lot to like here in the Kroger stock. In that long term, I think both are good. Long term, you could buy Kroger, you could buy Walgreens, you'd be good. But Kroger right here, dipping down to a new low, it looks like there's really nothing that's going to pop it back up or show any immediate gains. If anything, it bottoms out, trades dead money for 6 months until something catapults it higher. It's hard to say when that could be. Walgreens is already looks like it's already reached that point. The stock has gone down, it's gone down, it's gone down. It's reached that point here is kind of where Kroger is right now. But Walgreens has already gone through this stagnation point, and it's making all of the right moves, all the right partnerships to better its future. I really like Walgreens. Now, I'm not sure that it's quite Hade Portfolio. It's not quite up to our standard in the Hade Portfolio. It's not quite a stock that we would buy right now to say, hey, buy it at 52.60. It's going to go to $70 in the next 6 months. We make a good play. It's not there yet. I'd really like to see Walgreens get to about 56, $57. Then I would feel really good about it. I would want to buy it because I'm showing then that it's on the uptrend. I'm not having to wait for dead money. I'd rather miss 10% gain and capture the big bulk of its run than sit around and wait 6 months for it to start trading higher. So Kroger, not yet, but definitely in the future. Walgreens, it's already got this stagnation. It's a good time for those if you might be willing to wait. Otherwise, we're going to keep our eye on it closely. It's probably at some point going to be a stock that we add to the Hade portfolio that continues our trend of beating the market by 250% on an annualized basis. Check out HadePlatform.com and our portfolio performance. You won't be sorry.